It's Crypto Sniper. First thing I need you to know, today at American time, 2 o'clock, the FoMC will talk. That is the Federal Reserve Committee meeting, and that is going to have a potential bearing on crypto markets, whether you accept that or not. So we have spoken at length about the strength of the dollar, the significance of risk on and risk off, and how people that think they are in a complete silo or an exclusive little room for which institutional players that have now entered and pumped their bags are not influenced by external factors, are living a nightmare because their stock to flow models stop working, because lots of things stop working. Previous correlation starts to break down and new correlations form. It's a dynamic environment. Plus, we've got haters on that same very point. We've got a bunch of haters that are saying, what about the fact that a while ago you said Christmas turkey or 84,000 targets, all of that. We will address that and how that changed and why it changed and how actually dealing in a probability-based realm when talking about the future continually has forks in the road with myriads of potential possibilities and probabilities, plus the multiple layers of cycles where you have huge macro cycles that are like global tsunamis that will swamp an island, no matter of the fact that you have your dehumidifier on in your little hut. If the tsunami hits, you are getting wet. Yes, I was the man who spoke about wetsuit urinators in the last video. So we're back at it again. So we're going to deal with this. We tweeted, this was now 3 days ago, that there was a hammer over here occurring. You traded 33,000, in fact, on some exchanges, 32.9 you traded at this point over there in the single day. We're looking at a daily chart here. That was Binance. Horrible exchange platform to use, by the way. Let me just remind you of that fact. And that you had a clearly significant hammer and that a potential rally. What did we say? A decent Bitcoin hammer is, or may be, a precursor to a rally. So we're highlighting that there could be a point of strength going forward for now short term. But we were also highlighting the fact that the Fed speaks coming soon. The scope for a policy error, in other words, tightening too much, given how committed they've suddenly all become to killing inflation, could see them already hammer a battered US consumer. If you follow our Market Sniper channel, the Market Sniper, you would know that we had a good interview, very well-received interview with Danielle DeMartino Booth, who worked for the Dallas Fed, and she was referring to conversations with Lacey Hunt, no relationship, about how devastated the US consumer actually is. Remember, there's no new stimulus coming in UBI, it's not yet called UBI, stimmy checks, and in fact there's a bit of a fiscal cliff for the US consumer in terms of tax credits, various other things that will be withdrawn. And at the same time, inflation in the back end of last year, suddenly now the measurements are showing that essentially they've got barely 2% in rate salary increases, and in truth, John Williams shadow stat in and around 15-16% inflation rate in truth, a declared official by Bureau of Labor stats in and around 7.27%. So you are getting a minus 5% wealth effect. If you were one of the lucky ones that got a 2% increase over the course of that year. So job people are being absolutely battered. And this is how you kill the middle classes. This is how you smash the working poor into absolute submission, in that they just can't buy a wage and everything keeps getting more expensive for them. So we were referring to that as a potential rally point. You can see we had a bit of a channel down here. We're trimming the wicks. You can see this channel. Maybe the straight line would be better, Francis. Along the lows after this sell-off, you can see it was a bit of a channel. This kind of undermines for me the everybody's seen it head and shoulders. So we have a lot of scenarios that we've covered in our premium community. I am only going to cover a few of them here with you on Freeview. If you care enough to know what we truly think about the market, go to www.themarketsniper.com and book a call if you really want to know. A couple of scenarios we will talk about because some of them have already been mentioned and brought to you, and others have spoken about publicly, is the head and shoulder scenario on the 69K head and shoulder. Remember, there was a 64K head and shoulder that absolutely performed. But the difference between this one and that one is this was 69K as a high. That's a lot higher. And the working neckline could be as deep as the 42,000 on the other head and shoulder, which didn't go as high, 64. When you don't go as high, the amplitude, the target generated is obviously smaller, and the neckline was higher. It was in and around the 47.5, round about there to the left. You can't see it now. I will remind you of it on when we're next on the bigger time frame. Just while we're on this tweet, I want to stay here. So what actually happened is you're getting a much bigger drawdown from 69 down to 42. 42 is, of course, 5,500 lower than 47.5. And 69 is, of course, a better part of 4,000 more to the upside. So the projection actually incorrectly on this tweet, because my trading view did not correct for that, and I will show you that correction that makes this chart incorrect, was 15K, a 15K downside target. That is a very bearish scenario. It is not my highest probability personally scenario. I don't think it is going to happen. It's not my highest one, and we have quite a few scenarios, so it's one of quite a few, but you can't ignore that possibility. That could be your bull flag for right shoulder that eventually came down to that neckline. It's a bit of a rush shoulder. You had a little bit of an electric fence, instant resistance. I don't like it when you don't get a clear and heavy hang to the neckline on the later shoulder, which is, that's your left, this is your right shoulder. I'm okay with a bit more of an electric fence dip and rally on the first shoulder, where there's still some sense of bullishness and you're going to make a higher high by the time you start hanging higher. So I'm not giving this the highest score for head and shoulders, but if the Fed does get super aggressive and continues to act or talk about acting and show some action, and on that point, they can only go so far, by the way. Most of the spending of a government budget is already done. The first 80% is done. You've got about 20% that is partially discretional. If they go up 1 full percent, that's roughly 4 increases, their debt payments goes to 5% of that remaining 20%. So of that marginally discretional, that's not already pre-committed. The 80% is already pre-committed. It's pensions being paid to ex-war vets, etc., etc. It's gone. You've committed to it. Yes, it comes in, but it goes straight out. You've got to pay it. It's contractually obliged payments. Of that remaining discretionary element, 25% of it will go on interest-only payments, just on 1% raise. So you'll go from around 3 to 5. They can't afford it. They can't go as far as they think they can go. We should be positioning to call their bluff. However, they might want to crash the economy. And you have a battered consumer, and you want to be seen to, because they were behind the curve, to now catch up and be on the curve. They might overreact to try kill a monster when it's small, even though it's no longer small. It's already got away. It's super big. It's at 7%. You have negative yielding bonds all over the place. In real terms against this inflation rate on a liar of a number. So people are getting absolutely murdered. Remember, inflation is the tool whereby the global control structure wealth of corporatocracy grow their assets, because assets go up in value and they take all the money from everybody else. So everybody who's borrowed and is indebted but owns assets gets richer, because your debt continues to go down in terms of its total value due to the inflationary effects, and, wait for it, your assets go up in value just to hold value with the devaluing fiat. So if you're using a devaluing fiat measure that keeps getting compounded, devalued, your property prices go up, your corporations, your ship tankers that move things around and earn a certain yield go up, the prices they charge go up, but wages are crushed. Inflation is great for the billionaire class, awful for everybody else, particularly those on fixed salaries that need separate increases from bosses that require external, for which there's a lot of inertia. It's not a great economy generally, no matter what you're hearing from the Fed about how great it is, to actually up your wages, and they come in the level of 1s and 2%. That's why you should be your own man. Anyway, back to crypto. This scenario, the bear scenario, is a bit extreme, but it is one that exists, and it would take you down to 15, not the 25K. That is huge. Why? 42 minus 69, that's a lot. It's 27,000, and 27,000 off the 42 takes you to 15. Could it happen? It could indeed, and it's the calamitous option. That would see the Nasdaq spill even further. So the Nasdaq is down. We'll show you a little bit on the indices a little bit later. But can you see that I'm having to talk about a lot of things that are not crypto specific at the moment? Can you actually understand that when you're talking about macro, grand macro investing for wealth and reset, it is a much more complex game than just a single bubble where you're only interested in crypto and crypto is your freedom, etc., etc. When I started this business, we had a logo with 3 overlapping circles. But initially, in terms of the market, they were like separate realms. Here was this new industry called crypto in the TG pink. And then there was the technical traditional markets and HVF method that's there in the orange, the burnt orange of Christine Lagarde. And then we have the reset, little boy Pippi blue of Klaus's little Pippi. That is the great reset. This is all this conspiratorial talk that is so wrong and evil and deluded and proven to be wrong. These are totally segregated concepts 5, 6, 7, 8, 9, 10 years ago. And crypto, it was all about the halvening cycle. That was the most dominant cycle, and the news flow. Did Mt. Gox get hacked? What happened here? Where's adoption, etc.? Only the crypto news. And what has actually gone on to happen, and people are failing to notice and are hanging on to old, silly notions of real freedom existing in this. You're escaping the central banking cartel. On the one level, it appears that way. On the other level, there's new bills being passed where they can refuse, they can censor crypto transactions, they can stop various transactions, they can undermine privacy on blockchain. All sorts of elements that actually show that your crypto bubble is in fact overlapping with reset and is part and parcel of the reset plan, and that there is a point where crypto's role in reset will become far more clear to you. It's quite clear that the crash in the oil market, HVF method, and everything that is traditional, the Nasdaq risk on assets, risk off assets, are now also relating and affecting the crypto market. These are going closer together. And of course, reset and the traditional markets were always having some degree. So what's actually happening when you go to our Market Sniper, this is something we predicted and something that is essential and central to our branding. Going to themarketsniper.com, and we saw it all along. They are overlapping circles, and you are in the sights, the middle point of it all. When you look at that logo, in that all 3 of these things are converging. It's slightly small, difficult for you to see, but there's your reset off button that they are bringing. There is your Fibonacci, that is your traditional markets and pattern trading concepts, and then there is your crypto, and there, right there in the middle point, is all 3. And the circles are converging. That which you thought was segregated and safe and taking you away from it is absolutely bringing you back to the fact of history, that power is about history. History is all about power and money. And actually, once you have a certain amount of money, it becomes academic. It's about the power, and the absolute power is there to control you, and it is not being given up. Those of you that think you've escaped multi-millennia of historical family lineages whose sole goal is to retain their power over you on a transgenerational basis. And for that, you need to go to Odyssey, because I'm not going to talk any more about this. This is very much in the category of Reset Sniper. Go and see my latest Odyssey release on Reset Sniper to hear more about NFT. Our Odyssey channel over here, we spoke on the Orwell woke warnings that now that Orwell is 1984 is utterly the truth, and it is not fiction. Now it is actually getting woke warnings of how it might offend, disturb, etc., etc. We talk about NFT, the metaverse, and how this is our future prison in thee. You will be happy in your virtual goggles. We go into greater detail. I want to keep it crypto, but go and have a look. These require small payments of LBC, by the way, and you can be part and parcel of that. So watch out for that. Get more of our reset items over there. So back to Bitcoin, back to this tweet, back to this hammer. Let's go back to the charts and have a closer look at what's going on. We've spoken about the possible head and shoulder and told you that the target is in fact the 15K mark. That's over there. You're now at 37.7. But the warning was, is that it for the sell-off in risk assets? Remember, Bitcoin is not the only risk asset, and I think you're aware of that. But we did point to a short-term rally being possible. You will start to FOMO. You may want to get back in. The warning is the damage may not be done. Other scenarios exist that don't have to involve a sell-off all the way to 15,000. One of the things we were noticing, and I'll give you this one scenario for free, for example, is maybe it is just a minor league gradient upside channel. You will not be seeing this anywhere else. I've yet to see anybody else who's identified that this could be just a minor bull channel and you're just currently at the low ebb. This would represent around a 36K differential in height from the two trend lines. The original rising wedge squeezing higher is a cancel. Why? Because you've dipped too low here. There is no longer compression. You've gone from the possibility of an HVF that was killed. We warned you that the marginally higher high was a negative when it turned around on this rising wedge. The fact that that is marginally higher than that was a negative. It ruins most continuation pattern structures and opens the door to many corrective structures. Talking of which, the people that show up on the comments and say, you said a turkey for Christmas, which we did. You said 84,000, which we did at one point as a possible scenario. Why and how's it all wrong? So when you are modeling for the future, you look at the information you have and you count it as a possibility and you say that possibility existed. What was that possibility? So we'll leave this scenario of the marginally higher grind, which if you were quite bullish, you might go to maybe the neckline again, come along and go there. This would be a pretty bullish scenario. I don't think it has to take that much time. It can take a lot longer about getting up. It took quite a while from getting from there to there. But that would be a mildly bullish. But I want to warn you that an upward biased channel is more associated with bear flags and selling. This is actually on a bull pole, but would be a gradient, a massive gradient reduction from the first cup gold nugget break, which admittedly was an amazing spell, from the 9K to the 64K, very strong. That was your key moment to be leveraged, to a far more benign period until such time as we go the full inflation route. Look, they're going to lose the battle on inflation. That's why we are still super macro. That's the yearly chart. If you're looking each candle as a year, since 2010, you only have around 12 candles, that this is still in essence a big move to the upside. So crypto assets will get inflated long run on the super macro. However, within that you get bear markets like December 2017 all the way down till very late into 2018. Sustained bear markets, and they are totally destructive because a high volatility asset has big pumps and dumps. So the point being, in this period, this is a significant sell-off. Has it become a full-blown bear market? Actually, it hasn't run the falling wedge biggest low yet. So it hasn't made a marginally lower low, but it did make a marginally higher high. It is in between, but it is a very substantial correction. In normal equity markets, 20% is a bear market. You've gone all the way from 69 to 33. You've more than halved, or at least just about, yes, you're more than halved, it's safe to say. So it's a substantial correction. In any other market, that would have been a bear market. You've had a bear market since November to the point that we're at the end of December by most criteria. Not for me fully, technically, but it's a significant correction for crypto. So, going back to the people that will say, what happened to the Christmas? So our Christmas turkey comments, when they were made up until the 1st of December. Why? Because at that point, we had a big first impulse, and we had a basing bottom that we were accurate on, and then you had this move up to here and a pullback. And that was starting to look like a second structure. So what we then had, we also had a very key level, that 47.5 running through here. And we noticed that we got on a lower time frame a little pause after running the 47.5. So we said, maybe we've got a rush third impulse in there. In other words, there was a possibility of a scrappy draw, but the bias was bullish because we kept getting positive affirmation for continuation calls. So there was the potential for a very steeply ascending structure with final move here. That had projected an 84,000 target, and that was the reason. And you got a break initially and continuation to the upside up until the point of 69. Until that falling wedge broke, there wasn't too much concern with that. You were making progress from 47 all the way to 69,000. You took out the previous high. And you could well have argued that this was a breakout that was in process. That was our scenario. However, when this event came that ran 42, you cleared out the stop for this, and this then turned that possible pattern into a failed event. That means it's not going to occur. That cancelled the 84K target. You ran 42, you've run the stop. It was maybe a little too steep here. There was too much buy the dipping. Everybody got caught and re-FOMO'd back in. There was a little bit of a proportionality issue with that second impulse compared to this huge first one. It wasn't the most beautiful pattern, but it was a possible, and the assumption was stay bull. And that turned out up to that point okay, and then it was invalidated. So that pattern was invalidated at that point. And that was round about first week of December. That meant at the first week of December, 10 days, 15 days away from Christmas, you were out of the Christmas turkey major run. Alts also responded. They went up even more, making much bigger highs, including a Solana $260 run, and that also served you very well. That one made its target. Solana made its target to $260, and we can show you. Bitcoin faded, and with it, it brought the rest of the market down in due course. What was also happening? We highlighted that for you. The dollar was starting to get strong, and the dollar was reversing. Long before any of your other crypto follows. I'm looking at BitBoy's channel and how his calls have done on a tweet. The poor man, it seems to be that he's getting panned for it. He has 1 million plus followers. I'll take quality over quantity, but still you've got to respect someone who has 1 million plus followers. Where was it? You know, there calls a lot of new listings with massive stories. I was looking at this tweet. We aren't taking you into every high beta spec chart and crypto that's been released. I don't know half of these names, but they haven't done so great. So this is not our game. We are looking at the main God market, the driver, that is Bitcoin. And we're talking about those that are in the top 20 that have real established projects. We haven't got super speculative. Also, to all those that say, you called 84, you're wrong. All those you called 70K, you're wrong. I've explained why. There's always a technical justification. We are not the Max Kaisers of this world, calling 250,000. When we hit 64, here in April, the amount of YouTube guys, especially ones going like this, on their channels and bragging about how rich they are, all calling for 150, 250 by year end. We never have thrown out the biggest number. And if we have thrown out a number like the 84, there was a technical, geometrically derived, not even a Fibonacci where I can go to the 4.618 right the way up there, Bitcoin over there. The biggest number you've heard out of us was 84K, and it was invalidated there on that date. And that's okay. It's a feedback event. That means the market structure is not that strong. And in fact, before that even invalidated, we were already pointing out the relationship with the dollar index and saying actually the big move up was accompanied with real dollar devaluation, and that has changed. And we were sharing on a crypto channel FX news that was deemed highly significant, that was changing the overlay of markets. There are many different cycles that exist, and some are huge and big. The tsunami will swamp the efforts of your dehumidifier in your hut when it hits the island, I'm afraid to say. And some things were swamped. Other things we were criticized on was the COT indicator. The COT indicator has been swamped by the macro FX interest rate inflation cycle. Everything has been swamped. It's no longer significant how many more institutions are part of the big buyers versus and getting larger than the miners at selling and our net accumulators. It was significant for a while, in the same way that the bond rates was significant. This was also something we shared on our crypto channel with you when we split the chart and we said, have a look at this. You were correlating with the bond market, and we highlighted this divergence. Look at these two charts, guys. They were going up together and down together until they stopped. That's the thing. And this is the problem I have with the fantasists in the comment section, is they want you to give them a silver bullet for every day, every set of weather conditions. It's the only thing you need. You don't have to think for yourself. Nothing changes. There's no dynamism in the environment. This same thing, like a light switch, which will put the light on and the light off, that'll work all day long, weekends, storms, rain, and sunshine, that there will never be any dynamism. There will never be other bigger cycles that go into, that suddenly lead to a tsunami of liquidity being removed from the markets. So here was that relationship. We highlighted it too. Yields going up on the, I want to get the yields up on the top here. I've got two Bitcoin charts. That's pretty novel. They look pretty good. They look pretty similar, don't they? Let me get that yield. That's hysterical. This was the bit that we were highlighting to you. And then suddenly it stopped working. It stopped working. Why? Because what initially was supportive for Bitcoin, here you go, there's the down legs with the down legs, the Bitcoin down with the down leg of the yield. Inflation was supportive for Bitcoin. It's a risk-on thing. If you're steadily getting more inflationary, Bitcoin goes up in value because the fiat currency is dropping in value. If you become disorderly big, and the bond market is starting to collapse now because yields are spiking too much, there's your up and your down, suddenly you get this divergence area that we highlighted. It was shown on our cryptosphere, Twitter sphere, just follow. You start to get extreme moves. From here you can see a major breakout that was pushing up. It suddenly became exceedingly bearish. Why? Because it went from risk on supportive inflation, good for Bitcoin, to absolute fear, things getting disorderly, rush into the dollar, risk off, and you get an inversion. This is how markets work. There is nothing that is 100% holds 100% of the time for 100% different conditions. We are going into a tightening cycle, and there was real fear and a major pivot that affected the bond yields to the upside, and it stopped affecting Bitcoin to the upside. That is why things that are drivers at one moment cease to become drivers on another moment. So for those people that were leaving those comments in our last YouTube, etc., that is it. And in fact, nobody in a YouTubing sense, for all the kicking that we were taking, has actually identified as many of these drivers and given them to you. and pointed out when they worked and when they stopped working, and given you a reason why that's likely to be the case. So the dollar index, having been stronger on a bigger time frame, has rallied up, but is resting now. And what is happening? You're getting a little bit of a shooting star there, a little bit of softening. What are we on? We're on the 2-day. Let's put it on the 1-day there and sort it out for you and bring it back a bit down a little bit. Now you can see selling wicks at that same 50% level that ran through this falling wedge that you saw, the almost to the neckline return move. What you're actually getting is you're getting a little bit of support for Bitcoin. So again, highlighting that Bitcoin is actually a digital asset being compared to a currency called the USD. Actually understanding where the USD cycle is pretty useful. This looks like it's going to rest a little bit, having reflated from 94 up to there, which was very painful for Bitcoin during that period. You're actually looking like you're going to hang at these levels and potentially have a pullback. You might go a little bit higher, a little bit longer, but there's a sign of some exhaustion on the dollar. That wick cell there, that shooting star there, and we are currently going into the FOMC right now, very shortly, in fact, and you will see how that will pan out. If they become a little bit more dovish because the markets have collapsed, then you will know. Now, the key thing to highlight was, oh, so are you saying we should be buying? Is this a dip? No, because the dollar long run broadly is going to go up. Yes, it will go maybe up and a little bit sideways and then at some point rest a little bit, but in the macro sense we see it forming a continuation pattern and going higher to 99. That will be a headwind. There will eventually come a moment when you could actually get both going up together, and that will be a flippening event. It is not occurring now. While people are responding in fear, risk on assets are not good, so this can go lower. The other scenario that we have spoken about before that you already have is Bitcoin versus the Nasdaq, risk asset to risk asset. So I wanted folks to understand a little bit about that. So I'm going to leave those couple of things and a lot of explanations as to why things are, why they potentially are, and highlight to you that in actual fact we had this. I think it was Bitstamp we preferred, divided by the Nasdaq NDX we're going with over here for now. Doesn't truly matter which of the ones you choose. Now we put a box here when it was up top here and said ideally I would like to see it run the 2.5 level and bottom out here. I haven't touched or moved this box. And in that time, this is the cleanest chart of Bitcoin against any asset. This head and shoulders is perfect. The confluence of the necklines with the first cup gold nugget, 2.5-year continuation pattern target, absolutely on top of each other. The head and shoulder downside, this W bottom neckline, absolutely on the round number. 2.5 baskets of Nasdaq stocks bought with 1 Bitcoin. We said, we put a box here when it was up top here and said we'd like to see it come down around here and bottom somewhere in this box. And it's literally bottomed on the base in the middle of it in terms of timing. I say bottom. It hasn't necessarily bottomed. It may not have bottomed. It may only have put in a temporary bottom from that first cup gold nugget. We will see with the passage of time. Or something that happens is this continuation pattern happens in the end, but Bitcoin stops going down as fast as the Nasdaq. So you can, because this is no longer a dollar denominated chart, you could have a set of circumstances where the asset classes are still rating down, the Fed is still talking a tough game, but they are going down or drifting and holding and bleeding to the downside. But the equities market, particularly tech equities, which is a higher beta than the S&P, is spilling further. At the end of the day, you're only about 12% down off recent highs that were made in the tech market in November, and on the S&P, recent highs made in December. You're only about 10 or 12% down from all-time highs. So there is plenty scope for those to be revalued downside if the Fed continues its act of talking a tough game and doing a small amount. They will never be able to do too much. Of course, everything falls apart. They have no room to move. But they might continue the game, and the markets may continue to react and do asset downside revaluations. So there are a couple of scenarios. This could be the relative low valuation point for an extended period for crypto against tech. That doesn't mean against the dollar it's going to go up, but it could mean it goes up. Normally the higher beta crypto goes up when tech goes up, and goes up that little bit more. Not recently during this continuation pattern period. So there was already the beginning of fear after the first cup gold nugget that saw Bitcoin go down more than tech. Tech show more strength. But this down leg is not as steep as this one. And I do suspect that at some point you'll get an upside continuation. Do I want to get in here at the 2.5? Well, it's that concern about what's going on the dollar that could be a problem. You could go up in crypto against equities in an environment where you're going down against the dollar. If I was just trading against the Nasdaq, maybe I would. When is this scenario of an upside structure invalidated? Quite simple. When you cross the 2 mark. So if Bitcoin keeps shedding ground, and I would say you're already in deep trouble at the triple twos at these key levels. That was the second interim of our first cup gold nugget. That's to the left there, which was a key target that was run and led to support here, and the target of the head and shoulders. This was so well confluenced and indicated by this chart, which makes this chart so beautiful and probably the most reliable, plus multiple support periods here, tiptoeing to that support and held, traded through, held and bounced. So this could be a critical level. If you run the 2, it is no longer an upside HVF against this asset class. Okay. That's all I'm giving you. We have other scenarios. I wanted to just respond to the people that have criticized us for our creation of the COT index. Remember, the main COT index is when you got the first squeeze in a while, you got the one big signal in this area. Just want to highlight another misunderstanding that said accumulate here, and you got a second separate after you broadened signal here. If you just stay below the line, it keeps generating new arrows, but it is not a separate new signal. It's just indicating that you've had a signal. So when we code it again, when we have time, we'll make it first untrigger and then only generate a new signal if it comes back and triggers again. If you trigger and hold the trigger in, it's not going to keep shooting. It doesn't mean it's a fresh shot. You've got to let the trigger out. That means you've got to let it should be expanding. And what's actually happened is the institution, the biggest 4 buyers, are consistently higher now than the miners, and that may remain so even in a downward moving market. So the COT relevance is reduced by the macro cycle, and it may never become relevant again. It could come relevant again in time when other bigger forces have calmed down once the tsunami has washed away. Okay, that's it. We're going to go do the FoMC with the community now. I'm going to be doing this privately with them. This was just a quick crypto update of what's happening. This could be, if you're super bullish, a major turning point against this asset class. It could also be, when I did the Bitcoin dollar, a turn against the dollar as per that upward moving channel, which is a reduction in upside, but still in a more measured way that I showed you as a scenario. However, if the Fed is to be taken seriously, there is substantial risk that there is a lot more to come in terms of taming inflation. And inflation is a very stubborn thing. They haven't even done one interest rate rise. And by the time you've let it get to 7, they're never going to control it. But if they're going to be semi-serious about pretending to go about controlling it, they're probably going to need to do a lot more. If they already today start backing away because the markets are retreating, then they are already losing incredible credibility, having said inflation. They will have to do another pivot in very short succession. I think that's unlikely yet. They're going to try do some more tough talking for a little while longer. That means these equity markets that actually can deflate a lot more. Remember, the equity markets have not really come down that much. A super quick run past the equity markets here, just to highlight this fact to you. For example, the Dow, that's not really much of a sell-off. They're great hammers, but let's see if they hold. That's the Dow, traditional market. At its absolute lowest from its absolute highest, it lost 10%. And actually right now, it's only 6% off its absolute high. That is not tech. That is traditional companies. But still, that is a nothing of a down leg. We've had so much more. Don't forget, there's also, this is not including any of Klaus Schwab's major hacking events that will be more serious than COVID. Yeah. That was the better part of 40% that you got on the Dow when you had COVID. This is not even little pippy in comparison. What about the Nasdaq? Well, we must show you that as well. That is the highest beta of the tech. It probably needs the most correction. I don't think the news gets better for Cathie Wood. There was its last high in the 22nd of November, not very long ago. At its absolute low, you'd done 18% correction, and you're already at just 13.5 now. That is, again, a moderate, minor correction in terms of the scale that you got in the COVID. So there could be a lot more, and if there's more on these indices, it's going to be interesting to see is how much of that downside that the equities take down, if there's more, assuming there may be more, how much of it is put onto Bitcoin? Does Bitcoin show more relative strength in going down less relative to the Nasdaq, or does it go out the same amount, or is it going to be as normal a higher beta and dip further? That is going to be a big question that we look to answer. I've got to go to my premium, guys. Thank you for checking in. Book a call, themarketsniper.com. It's not what you make, it's what you keep. Remember, our branding for 10 years, it's been publicly available. It's been in my mind's eye for 20. The 3 great circles, we've called it all along. Your whole reset and end game that is conspiratorial, bringing it down, new system, the crypto realm, and the traditional markets and HVF method. Those 3 circles have all merged in as I drew to you. You are in the center spot, and every single one of them is part of your existence. You need to build wealth and protect wealth. If you are not doing that, you will be taken by the unseen tsunami wave. And even if you are, you will still have great risks, but you will have a good sluggers, fighters chance. And that's our game. Thank you so much for watching. We appreciate shares. We appreciate likes. And I've got to go serve my community, guys. We're going to go see what the Fed's going to say. Catch you next time.